Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Just want to make a quick announcement before we get started tonight. There will not be a WaveTech training on Tuesday. I am going to do a live stream that I do on Wednesday. I'm not going to be able to be in the office on Wednesday to do the live stream, and we're going to move the WaveTech training till Thursday. So tomorrow's live stream will be at 1:30 Eastern Time, and on Thursday we'll do a 4:30 WaveTech. Make sure you mark your calendars, bring your questions. I'll cover stocks and any questions you have. Looking forward to working with everybody. So looking at Monday's action, we did see the market move up above the 3,300 level. I mentioned in last night's commentary that I thought there was enough momentum to get through the 3,280 level and move up to the 3,300 level. And we got to 3,302 and change, and there is resistance you'll see on the market grid tonight at 3,303. There's still some possibilities for the markets to go a little higher before they start to hit any type of major resistance. One of the things I'm going to cover in detail tonight in the technical section is the lack of momentum that is occurring during this move to higher prices. This appears to be very dangerous in the configuration, and I'm expecting to see a rollover. Also, when I covered the database, you'll see we had another 800 sell signals, and we're seeing an internal collapse of the database. I discussed this last week, and I'm continuing to expect to see further deterioration of the underlying trends. And this is important to understand. Back in January 15th, January 21st, we started to see a lot of internal selling going on individual symbols. And this was about 6 to 8 weeks before the big collapse in prices. So on a short-term basis, we are seeing that deterioration. Cover all the details here in a few minutes. As we come into Tuesday's action, we do have one report, factory orders, nothing really to see there. It's not going to be material to market action. We do have 330 earnings reports coming out, which are going to be plenty of action. A couple symbols that caught my eye was British Petroleum and Disney. There's plenty of others to look at, and we'll be on a live stream, so we'll be able to cover these possibly in real time as things are happening. I'll depend on you folks to guide me into things that you're seeing in the markets. Overall, my expectation continues to be for the market to fall back into a range. There's some substantial vulnerability to the market structure right now. So let's go ahead and take a look at the charts and see what they're telling us for Tuesday. Reviewing the WaveTech database, as I mentioned in the opening comments, we're continuing to see a mass liquidation on the short-term models. There were 729 3.2 longs exiting and 181 3.2 symbols also selling. Now the 3.2 is the highest optimized model. This suggests that a lot of trades that have been carried on since literally early March, April, and May are starting to exit. And this tells us that there's an internal rotation going on. It's actually a very healthy pattern that's going on here on a short-term basis. It's actually a very healthy pattern going on a short-term basis. It's going to take about 4 to 8 weeks for this process to unfold. Now, I mentioned also that we saw this type of internal rotation start back in January. Also, we're seeing the same rotation going on in the intermediate database back in January as well. Right now, it is a different configuration. The short-term database is beginning a liquidation phase, while the intermediate database is still expanding. And what happens in this type of pattern, you'll see a short-term return liquidation of the database. Meanwhile, the intermediate database will stay reasonably stable, while the indices will set up a broader trading range, possibly even print new highs, and the breadth of the market will get thinner and thinner as we go forward. That is the first signs of setting up a top of a sequence, is that thinning of the number of stocks participating in the rally. Now, most people think there's only 5 stocks running the market. It's not true. We had over 12,000 symbols that were in trending mode on a short-term basis. Looking at the intermediate database, there are 10,866 symbols that have buy signals. Therefore, they have been detected as entering into trend phases. Now, some of them are further advanced than others. A lot of these trades have come on over the last 6 weeks. Over on the far right, if you look at the current duration on the optimized weekly, the duration fulfilled right now is only 14% of the intermediate trends have been fulfilled. So looking forward, there's still a substantial amount of upward movement to unfold on an intermediate basis. What's likely to set up is a consolidation phase that is likely to last between this 4 and 8 week period. As the market configuration starts to reveal itself, it's likely to be very choppy. As I mentioned in the opening comments, this does not suggest that the market's going to roll over in a big way, but that it's going to roll over into this consolidation. As I've said before on this channel, it's not all about just the S&P and the big indexes. They are being driven by a small subset of stocks. This is looking at a bigger universe, seeing that these things are starting to unfold. We have 1,300 earnings reports coming out this week. So there's plenty of action over the next 2 weeks. It's going to keep this churning going from an individual stock basis, and the indices ultimately will be affected by this action. Beginning with the S&P futures, this is what is concerning to me. If you look at the PPMs, you'll see they are completely flat. Now, we were able to move gradually into the new high. So I mentioned this on the live stream before. There's no real heavy push coming on a short-term basis. There is a maintenance pattern of the trend, and that is likely to continue. What this suggests is there's some vulnerability to test the moving averages in the pattern. Right now, the 10-period moving average is 32.48, and the 21-day moving average is 32.17. So all I'm talking about here is a move back into the 32.17 level, and potentially there is a possible move down into 31.60. If you've been watching the channel, you know I've mentioned 31.60 multiple times. The probability suggests that that number could be hit in this pattern. Now, there's still some upside to this market. As I mentioned, you can see here on the grid, you're looking at R1 today is 33.0250. Yesterday's high was 32.9550. Tonight's high has been 32.9475. So there's still some possibility here for us to print through that. Let's take a look at the cash market, and this will actually tie this together. So cash went to 33.0273 yesterday. R3 yesterday was 33.0582. As we look at the market grid for today, 33.03.81 is resistance. That could be retested today. If we fail to get above that level today, then we're going to see a move back into 32.75, 32.60. And if we look at the moving averages on the cash, you'll see those numbers are right in where the moving averages are. 32.51 is the 10-period moving average. It's moving up slightly, so it's going to move closer to the 32.60 level. 21-day moving average 32.19. That puts us closer to the STX's 32.25. I don't see those numbers getting hit today. It looks like we're going to see further grinding, the possibility of retesting yesterday's high. If we get through that, the next numbers are 33.16, and on a weekly basis, if you recall, 33.24 and 33.40 are likely in this pattern. Looking at the NASDAQ futures, yesterday we saw a high of 11,073. The RXT yesterday was 11,167. We fell just short of that number. We're actually witnessing an increase in the momentum. PPM1 has ticked up to 0.22. PPM2 is 0.22 and PPM3 is 0.29. So the configuration on the daily NASDAQ still is in trend mode, and this is likely to keep a positive tone in the markets, keeping the potential for the markets to move higher. The major support in this market right now is 10,728. And I don't see us getting below that level. As we look at the market grid for tonight, S1 is 10,978. We've been down to 11,026. R1 is 11,110. So far, 11,090 is the number. My expectation is we'll probably see an S1, R2 number again today. That'll push us up to 11,184. So there's still some upside in this market. The vulnerability will come in is if a penetration of 10,078 comes, then there will be some moderate downside. But with these trends continuing to evolve, not likely to see very much of a price rollover at this time, especially since all market participants are really focused on Thursday and Friday, with the employment situation being the total focus of this week. Looking at the Dow index at the DXY, we're starting to see the PPMs actually turn up very nicely, all three of them at the same time. So the Dow appears to be putting in some sort of minor bottom here. That will most likely affect the trend that we've been seeing in the metals. This is a substantial event, but there's still a lot of resistance overhead between 98 and 99. Going to the weekly Dow index, over the past several weeks, I've been covering the Dow using the nearest futures contract, and it has a different formation, especially when it comes to the 200-week moving average. Now, the 200-week moving average right now is at the 96.44 level on the cash index, but you also will see that the PPM1 is starting to turn up. It's still negative, but this is the first signs of a bottoming pattern on a weekly level. Now, let's look at that nearest futures contract, and you'll see the contrast. You'll see that the 200-week moving average is much closer to the market action, and I find this to be a much better, from a trading standpoint, I find it to be a better indication of what's going on. The PPMs look the same. The price movement is obviously relative, but the nearest futures, that these actually roll over every quarter. So there's premiums and discounts in the rollovers that get accumulated over time. The 200-week moving average is 93.86. The last trade here is 93.32. So we continue to be just under that number. The final market I'll cover tonight is gold. We managed on last Friday to remain just below the RXT numbers. We didn't get a minor trigger for a sell signal off of the market grid. Regardless of that, gold is likely to move into a sideways pattern. There's still an upward bias. We've got strong PPMs on a weekly basis. Most of the contacts can be better seen here looking at the daily chart. You can see this formation going into this sideways pattern over the past several days. You also notice PPM1 is starting to roll over. It's still positive 0.63. That suggests that the major support now is 1956 to 1969. You'll see on the grid for today, R1 is 1994.50. We've seen a 1995 high, so we've had an R1 hit. S1 is 1978. And if that was taken out, then we would move down toward 1969. It appears to me that this market wants to flatten out here, consolidate the gains that we made over the last couple of weeks. This will complete the video for tonight. Look forward to seeing everybody on the live stream tomorrow at 1:30 Eastern Time. Have a great day trading. See you in the live stream.